whatever the case may be. It's only Tuesday, so the market still has plenty of movement left for the remainder of the week. So we're going to break that down, right? So like I said, if you guys have questions, comments, concerns, confusions, the only dumb question that you guys can ask is the one that you don't ask, ladies and gentlemen, okay? So like I said, there's traders of all different levels. Some of you guys have been trading for, a couple years already. Some of you guys are a few months old, and some of you guys don't even trade yet, which is fine. I'm trying to make my screen smaller here. Okay, cool. So yeah, wherever you guys are at in your journey, it doesn't really matter, just as long as you guys are focusing on learning and growing. Okay, so first thing I want to go about is just show you guys this small update inside of the program. A lot of you guys, not a lot of you guys, but I got some people that were messaging me saying that it was a little bit confusing going through the 45-day roadmap on where to find like the full strategy with everything put together. So we're gonna go ahead. I'm just gonna show you guys that really quick. So my actual trading strategy is inside of the Pit Blueprint, which if you're a university member, all of you guys have access to that. But that's like its own little separate program, like separate course. But some people didn't really know to go watch that. So what I ended up doing is I put this exact same course inside of phase 3, inside the university. So if you guys go to phase 3, which this will take just 1 second. Okay. If you guys go to phase 3, after part 3, you'll see the Pit Blueprint. So this is that exact same course, but it's inside of the end of phase 3. Now that way, nobody skips it, nobody misses it. If you guys have been going through phase 3 and you kind of are a little confused on how everything kind of gets put together, then that's what the Pit Blueprint is about, right? So really quick update, for those of you guys that have not watched that, full strategy session, yet, that is here inside of phase 3 underneath the Pit Blueprint. All right. So, and I'm saying that because a few students messaged me and they were getting a little confused when they started trading on demo, because they went through phase 1, phase 2, and phase 3, but they still didn't really understand how to put it all together, right? So the purpose of the Pit Blueprint is to put it all together. The reason why it was its own separate program before is for your own benefit as well. Like if you're a student and you've been trading for 2 years and you've gone through the course months ago, years ago, I don't want you to have to go watch every single video in order to see the strategy, right? So the Pit Blueprint is like 2 trading sessions, taking real trades that I took and breaking them down using the information that we taught in the 3 phases, right? So that's to put it all together, pretty much. All right, so that's the only update that I have for right now. Again, if you guys get confused on anything, just let me know. And update number 2, which is a mini update, so not technically a real update, is the live streams, man. Like I said, I appreciate everybody's patience with the live streams. I know I've been saying that I've been going to be doing them. But it's a lot, dude. It's a lot. You got to plan it around. You got to plan your whole life around these streams. You know what I'm saying? So I'm going to do my best to be more consistent moving forward, right? So I appreciate your guys' patience. And more than anything, I'm just excited to be here right now. You know what I'm saying? I'm excited to be here tonight. We're going to look at the market. We're going to have some fun. We're going to see what we need to do to make improvements on our trading and what we need to do in order to scale our trading in the next 3 to 6 months, 12 months, whatever. So while I'm getting all this ready, I'm going to go ahead and give all of you guys the opportunity to ask a question, right? Is there anything that anybody wants me to prioritize, I guess, for lack of better words, while I'm going through this, I guess, analysis, for lack of better words? Is there a certain indicator, a certain thing in your technical analysis, something in your strategy, something in the setup, time frames? If you're a beginner, right, none of that really matters to you. So I'm just going to kind of teach you everything, the best I can while we're on here. I'm not going to try and take too long on the call. We're going to try and maybe be like an hour, more or less, get in, answer questions, find a setup, and get out, pretty much. But while I'm getting this ready, if anybody does have an outstanding question about demo trading, live trading, or anything in between, you can take a second to ask it, right? And if you get confused while we're going over everything, then go ahead and ask your question there as well, right? It's completely fine. Like I said, the only dumb question is the one that you don't ask, right? So don't just be sitting there thinking, damn, I have a question, I'm confused, and you don't ask anything. You know what I'm saying? So with that, if at any point you guys do get confused, just let me know and I'll answer it for you. Okay, so what we're gonna do first is, so yesterday, last night, right? So I traded a little bit out of session last night. So there's four main time frames to trade. You know, times throughout the day that are better to trade. Usually, I trade more in the morning at like 8 a.m., 8:30, more or less. But last night I took a trade at like, I couldn't even tell you what time. It was I thought it was gonna be here, but I guess I deleted it by accident. Right around here. Um, Yeah, like 8ish, like 8 p.m. So around now, right? So right now what we're getting into is what's known as Tokyo session, right? So there's four sessions, New York, London, Tokyo, and Australia, right? Not in that order, okay? But that's the four sessions, okay? So right now what we're getting into is called Tokyo session, right? So I don't usually trade at this time. Not for any particular reason. Honestly, I go to bed pretty early, you know what I mean, or I try to, so I don't really like to be on here at this time. Full transparency, man, right? But we're gonna be here for tonight, anyways. I started out trading at this time whenever I first got started, and the market does move good. It's just a little bit more. You got to stay up. You know what I'm saying? And then next session is London session, which is 3 a.m., which is where I have a feeling that whatever trade we potentially find tonight is probably going to be moving during London session more than Tokyo session. But you know, we're getting into the opening of the session, meaning that we could potentially still get a good move um, on whatever trade that we're looking at. Okay, so yeah, but last night I took a trade. Pretty much, it was no, I took a buy on Euro US. So I took a buy. I think like it was like around here, and I did a small stop loss. I did like 10 pips, and I put like a 30 pip take profit. So meaning we're gonna risk, for example, if I was risking $150 on the trade, which I was, you would multiply that by three, which is, I'm not good at mental math. That's 450, right? So for every $150 we're risking on a setup, we're aiming to make around 450. 350 to 450 is what we're aiming to make per trade, right? So what happened though is I lost two trades last night. So I took a trade on Euro USD and on USD CHF, right? Euro USD is the European euro traded against the dollar, and USD CHF is the US dollar traded against the franc, right? So, and the reason why I took both trades is because technically they move opposite of each other. So if Euro USD is going up, then USD CHF is going to be going down, and vice versa. If Euro USD is going down, then USD CHF is going to be going up. Okay, so with that being said, I kind of did a weaker analysis, right? You know what I mean? So again, the point of that, I'll say this too. The point of these streams is for you guys to, one, learn what to do good, and two, learn what things to avoid doing, right? You know what I mean? So in that sense, something I did bad, right, which I tell you guys not to do, is I half-assed this setup, right? So I analyzed Euro USD pretty good. That was a trade I just lost, right? That was, nothing I could have done about that. We'll still break it down. But USD CHF, I didn't really analyze that one at all too much, for lack of better words. So what ended up happening is I bought on Euro USD and I sold USD CHF because they move opposite. The only reason I sold USD CHF is because of the fact that it moves opposite from Euro USD, right? So that was my entire trade idea for this specific pair, right? What ended up happening is since they move opposite of each other, I lost Euro USD because this one ended up going oops. So I bought Euro USD, I went into profits for a little bit, and then it went down and I got stopped out, right? So same exact thing happened on USD CHF. So I ended up, basically what I'm trying to get at is I unnecessarily lost twice the amount of money that I should have, right? Usually I only take one trade per day, and if I'm risking 150 bucks to make 450, that's great. But I got a little bit greedy and I risked 300 technically to make 900, right? If I would have won, would I be complaining? Obviously not, right? But the point of what I'm saying is that these kind of things happen, and whenever you guys are trading as beginners, if you make, a mistake or you lose a trade unnecessarily or whatever it is, right? It's not to beat yourself up about it. That's what I'm trying to get at. Is don't the purpose of what I'm saying is for that way you don't get overly upset thinking, damn, I lost two trades in a row. That means I suck. Technically, I only lost one trade and I lost one analysis, is a better way to put it. You know what I mean? So what we're going to do tonight, though, is we're still going to break down both setups. But again, primarily, if we look for something tonight, I'm only going to be looking for one trade, right? Which is probably going to be on Euro USD for a number of different reasons. I've said that plenty of times on different live streams and in the course. I'm not going to really go into that tonight. But we're going to see what the market's doing tonight, okay? So, reason why I look for buys, and I'm still kind of biased, right? I'm still kind of seeing that we might go up in that direction. But the reason why I did it before was pretty simple. So there are two different things that we're going to go over. Okay, we're going to go over tools that you can use for trading, and we're going to go over charts, right? We're going to go over two different things, okay? Because the tools that we use for trading is kind of like half of the analysis, and then what you're seeing on the chart itself is going to be the second half of the analysis, okay? So first, tools. Right, let me just put a line that way you guys can see where we're looking at specifically. So if we're looking right around here, right, we're looking right around here. Where this dashed line is, that's where we ended up getting in on the setup. Which one was it? This one. Okay. So we're looking at the same pair. This is the same pair, right? So we're gonna put a dashed line right where we got in, right over here. Okay. So for the main reason why I did it, and again, I did this relatively fast. I wasn't necessarily paying the most attention. I didn't really spend 15, 20 minutes analyzing this. I was getting ready to get off my computer. I looked at the computer for 5 minutes and I just said, okay, well, this looks like a good setup, so I'm going to take it. Okay. And that's going to be another talking point we're going to get into, is just having the urgency to take a trade. Right. So, we'll get into that later. All right. So first thing that we did, in order to look at this setup, right, is a couple things that I noticed, right? We're going to delete this stuff to make it look a little bit cleaner. So when the market was right here at this time, okay, the first thing that I noticed was how we had to change the momentum, right? So I'll show you guys exactly what I mean here. So at this current point in time, we were going in an uptrend, a pretty steep uptrend, an aggressive uptrend, right? This white line right here, this represents a major whole number zone, okay? And as a major whole number zone, that means that it's an area where the market is going to have a bigger reaction than normal, okay? So taking that into consideration, I looked in a little bit closer. We're going to do this, right? And I noticed that we broke through that major whole number zone. We broke above it, and obviously we came back down, but the main thing I was looking at is that we broke above it, right? So that just kind of told me at that point in time that there was an interest in going higher, right? Does that mean we're going to go higher? Not at all, right? But it means that there is a potential that the market wants to continue in that upwards direction, right? So that's first thing that we looked at, right? Was this initial swing right here. Okay, so being that that was an initial swing, every time something goes up, right, it needs to go down, right? And every time something goes down too much, it needs to go back up. Okay, so taking that into consideration, right, the market went up and I knew that it needed to come down, right? So whenever I got on the chart and I was looking at it, I noticed that we came down and we stopped right here. Okay, so I'm going to delete this so you can see it a little better, but I have a dashed line right here. Okay, and this is known as a quarter level, right? So if you haven't watched the videos yet, inside of Cashflow in phase 3, I have, it's like an hour-long video, but it goes over whole number theory, okay? And basically, it's going to sound a little mathy, but it's really not, I'm telling you, but it's just going to sound a little mathy, where every quarter, half, and whole number, so basically I'm just going to tell you a number, like 1.00, for example, that would be considered a whole number. Okay, 1.25 would be considered a quarter level, right? Like a quarter. You know what I mean? You have a dollar, you split it into 4, you have a quarter. You know what I'm saying? So 1.25, then there's 1.50, which is half of 1. You know what I mean? It's half of the distance. And then next would be 0.75, and then next would be 2, right? So you have 4 levels that matter. Okay, and inside of those 4 levels is what we get known as price action. Okay, so in any market too, if you don't believe me, go look at it yourself, right? In any single market you want to talk about, crypto, forex, commodities, energy, whatever it is, every single pair or indice, whatever it is, or ticker, moves in between whole numbers, right? It moves in between psychological number zones, right? The reason being, right? Let's say you buy a stock at $1, right? And it goes up to $1.50. More than likely, you're going to want to sell it just because of the fact that it hit a rounded number. Versus if you saw the stock was at $1.44, you're more than likely not going to want to sell it yet, right? You're just going to want to wait until you see the next zero. Literally, that's what it is. So, whole number theory is about the psychological aspect of how institutional and retail traders look at the market. Okay, so in this situation, what I'm going to reiterate again is here, right? The market broke through a whole number zone, right? To the upside. It broke above it. Okay, and then it came back down and it stopped. Where did this price stop at? It stopped exactly at a quarter level, right? So the quarter level is 1.15750. Okay, the number does not matter, right? What that number represents doesn't matter right now. What it represents technically, it's just the exchange rate between the euro and the dollar, right? It's mumbo jumbo. Okay, so in that, taking that in consideration though, it is a stopping point for the market. Okay, so what I noticed is, okay, pretty much we went up, we made a new high, we retraced down to a quarter level, and then we started doing something known as consolidating, right? So consolidating, let me delete this to make it a little bit cleaner for you guys. And this information that I'm going over now is going to be relevant when we look at the market tonight. Okay, so we're just going over what we went over last night to go into what we're going to look at for tonight. So again, so the market made the three things, right? The market made a new high and we retraced. We retraced. Where do we make a new high? Past the whole number zone, and we stopped the retracement at a quarter level zone. Okay, immediately after that, we have a little zone right here of consolidation, right? So consolidation means that there's a buildup of pressure, right? The smaller the movement you get in the market, the more pressure is being built up. Okay, this is normal buying and selling between traders. Okay, but so if the market ever looks like this, it's just going normal. That's good, healthy, normal movement. Okay, but if you ever get on a chart or your computer and you look at a screen and you see this, a very tight, choppy thing, that means that either the market is either going to go down very aggressively or it is going to go up very aggressively, right? There really isn't a situation where that does not happen, okay? So, except the one that I happened to get into last night, right? Where I lose it. But that happens, you know what I mean? So, again, to take that into consideration. So, this is just what I'm seeing, okay? So, I noticed that we made a new high. We broke past the whole number zone. We stopped at a quarter level, and we are currently consolidating, okay? The next thing I ended up doing is I have a tool that I like to use a lot. If you're a student, I have a full other 1-hour training video that shows you how to use it exactly right. But it's called the Fibonacci. Okay, so Fibonacci is a tool that helps you see where the market is going to go, right? Where the market is going to go based off of where it's been. Okay, so if you guys want to, if you're not a student, I'll go ahead, I'll show this here. I'll leave this here for a couple seconds. If you guys want to go ahead and screenshot that or whatever you want to do. These are the settings that I use for my Fibonacci tool, right? And it took me a long time to figure out how to use it this way, okay? So, you know, if I recommend you take a screenshot and you use it this way, right? There's billions of different ways to, not billions, but, you know, lots of different ways to use this specific tool, right? People have, if you go on YouTube, you'll find literally 50 different videos on the first page with different settings on how to use this exact tool, right? And I've gone probably through every single one of those videos over the last few years, plus probably another 100 videos that I've watched about it to find this particular setting. Okay, so I recommend, again, take a screenshot of it and just make your Fibonacci look like that as well. I need to change my stupid credit card on TradingView. If you guys don't pay for TradingView, I highly recommend you pay for TradingView. It makes a huge difference. Okay, but here are the settings again. I'm going to leave that there for another second. But basically what the Fibonacci tells you, okay, is again, if the market made a swing is basically like it went from here to here, right? The market went from here to here. It's telling you where the market is potentially going to go for a retracement or a pullback and then go for its continuation. Okay, so for this specific example, right? Um, there are 3 different zones. Okay, I sometimes call them different things in the course, I think, but currently I have red, blue, and yellow. Okay, red means really get in. Blue is just the ideal zone, and yellow is the first possibility for your trade. Usually in this order, right? Yellow usually never, not usually never. Yellow is the least one to happen, right? Blue is the one that's going to happen the most, and red is also not going to happen that often, but when it does, it's an amazing trade. Okay, so I'm going to show you guys again how it works really fast. Okay, so I'm measuring it from here to here. Oh, why are you doing it from there to there? Right? The reason why we draw our Fibonacci from there to there, right? And again, before you get too confused, again, Fibonacci, I'm just going to reiterate it. Fibonacci is just a tool. Like how we said, there's charts and there's tools. Fibonacci is a tool that you can use to just simplify your trading and make it a little bit easier, right? That price that we're about to identify, could you find it a different way using fair value gaps or using smart money or using a robot to trade for you? Could you do that? 100,000% you could, right? But there are different ways to get to the same answer. Okay, so I think that the Fibonacci is a great and easy tool to use to simplify your trading and make everything kind of just be easier to identify. And I don't know about you, but I like my stuff pretty easy. One of my mentors told me when I first got started in trading and in business, the acronym to remember for the rest of your life is KISS. Okay, KISS. Keep it stupid simple, or keep it super simple, or keep it simple stupid. You know what I'm saying? So, but KISS, keep it simple, right? So using that knowledge, okay, I recommend that you guys use it. If you guys click on TradingView, on the third thing down, you'll see fib retracement, right? You just click it, change the settings to what I just told you, and you're good. You're chilling. Okay, so all that into consideration, now let's move forward. The reason why we drew it from here, I'll just delete it. That way you guys can see me do it again. Right, so we're going to start drawing it here, and we're going to end the drawing here. Okay, the reason why we're doing this movement particularly is because this was the most recent aggressive move, right, that we can look at, right? If you don't really have experience looking at a chart, just trust me, I'm telling you, right? But if you have some experience looking at a chart, you can go look for yourself, right? When you draw Fibonacci, you draw it on the most, again, I'm quoting this, the most recent aggressive move. In other words, the most recent low to the most recent high on the time frame that you're looking at, okay? So if we're looking at this 15-minute time frame, right, we're looking at this 15-minute time frame, all you're going to do is you're going to look at the most recent, look, I'm going to do this to make it a little bit easier too. Or I'm not going to do it, never mind. All right, but pretty much what we're going to do is this, okay? When you look at your chart, you're going to look at the most recent high or low, okay? If you're looking when it's going up, you're going to draw it from the bottom to the top of the move, okay? That's it. So all you got to do, you're going to delete it, you're going to take it, you're going to put it at the bottom of the move, and you're going to drag it to the right to the top of the move. And that's it. That's your tool. Okay, now we learn how to use it. Okay, after a certain amount of time that you use this tool, you'll just kind of be able to visualize it. So what I like to do now, since I'm again, a little more experienced, right? A little more experienced, is I don't really like that many lines on my screen. If I wasn't a teacher, I would delete every single trade setup after I'm done using it, just because I like to have my screen clean, right? But because I'm a teacher, I leave it on here to show you guys. Okay, so what I like to do is I like to just identify the blue zone, right? And the blue zone is the cash flow zone. Okay, so that's the most important price inside of that fib. Okay, what that means is that this is, I don't know if you guys know the word, but it's called equilibrium. Okay, equilibrium is the perfect balance pretty much between two things. Okay, so this is the bottom, number one. Thing two is up here at the top, right? So the equilibrium, the center, the balance of it would be this blue zone. Okay, So now I'm going to tell you guys what these numbers represent really quick, right? To keep it very simple, right? You learn it once, you never need to learn it again. Okay, so this move, it's going to sound mathy. It's really not mathy, okay? I'm telling you, just trust me. All right, it's not mathy, okay? This move is going to represent 100%, okay? 100%, okay? If you're listening to, I want you to do me a favor and type in the chat 100%, okay? For when we're using our Fibonacci, this represents 100%. The move we're measuring is 100%. If that makes sense to you, type 100% in the chat, please. That way I don't just keep rambling. Awesome. Sweet. All right, cool. So understanding that, right, the move represents 100%. Each one of these zones and each one of these numbers represents a percentage pullback, right? So anything that has to do with trading has to do with buying and selling, okay? And think about it like this. If you're buying something, you want it at a discount. I'm assuming, right? I don't believe anyone in here likes to pay full price for things. I know I don't, right? I like if it's free, it's for me, even better, right? So the cheaper, the better, right? And that same concept applies to macroeconomics. Macroeconomics, for those of you that don't know, is a form of trading, right? Trading is a form of macroeconomics, the way we're analyzing the macro market, okay? So retail investors and institutional investors like to get things at a discount also, okay? So if you're buying something, you would like to get it, for example, 25% off, right? If you saw a 25% off coupon, more than likely you're going to be enticed, okay, maybe I'll buy it, right? So what these zones represent is the retracement of price in percentage, right? So if this represents 100%, the yellow zone, if we're going to look to the right, represents a 25% to a 38% discount on price, right? To sum it up even more, that means that price went down by 25%. Okay, what does that mean, Ollie? All that means is that it is an attractive area for people to get into the market. That's all it's telling you, right? It doesn't say anything else. It's just saying based off of the Fibonacci sequence, and I don't want to say arithmetic. That might sound, don't quote me there, but based off of algebra or whatever math that I don't even understand, right? This is just a sequence that naturally happens in everything, right? So it's a sequence though where it tells you without you having to really guess where is the price likely to go, right? So there's three options, okay? You either have your 25% discount, you have your 50% discount, or you have your 78% discount. These are all three zones that the price could go to, okay? So I'm going to show you exactly what it would look like, right? So let's just say, for example, the market goes up. We're going to ignore everything over here to the right of the screen. We're just looking right here. The market goes up. It's going to come down, hit this zone, and at that point, buyers are going to start entering the market. Why are buyers entering the market, Gianni? Because the market was going down, right? Meaning that after we hit this high point up here, sellers started to come into the market, right? People start taking profits. People start getting stopped out. People are just tired of buying, whatever it is. It doesn't matter, right? What matters is now the market is going down. What that means is there are sellers in the market. That's it, okay? So now that we're understanding that there's sellers in the market, right? Who do sellers, if you're selling something, who do you sell it to? Right? Who do you sell it to? If you're selling something to somebody, who is the somebody? The somebody is the buyer. Okay? So the price is gonna keep going down, selling until it's at an attractive enough price for buyers to enter the market again. Okay? Meaning, so if the price went all the way up here, I don't want to hold it anymore. I'm going to sell my orders. I'm going to take profits, whatever it is. I'm going to start selling. Okay. I'm going to keep selling until somebody wants to buy, right? Somewhere in the planet, somebody's going to see this as an attractive price. And what's going to happen is the market's going to start going back up, right? And it's going to make the next high. Let me move this over here. 1 second. Okay, that looks a little better, right? So the market's going to move higher once it hits that discount zone, right? Option number 2. Oops. Okay, we're going to finish this in a second. All right, it's going to be done in just 1 second. So now So that's option one. All right, option one is it goes up, hits zone number one, and continues higher. Option number two, we're going to go down to the cash flow zone, which is the one that usually happens the most, right? We're going to hit this zone, and then we're going to go up, okay? That's option number two. Option number three, which is usually the least likely one to happen, but if it happens, it's a very, very good trade, is you're going to go up, and you're going to come all the way down to 78% off, right? If you see something on sale for 78% off or 80% off, you're probably going to buy it. You know what I'm saying? Right? So if you didn't take action on 25% off, if you didn't take action on 50% off, but now you see it's at 70, more than likely you're going to buy it, right? That's just the thought concept behind it, okay? So if it hits this 70% zone, usually it's going to go up, okay? And it is the exact opposite if you're selling, right? If you're selling, I'm going to do that really quick. That'll take me just 1 second. Okay. So if we're selling, which I could have very well have done this as well, but I just didn't really think this was the better one to do. It's the exact same concept, and it's going to show you guys for example, okay? You draw it from left to right, you know, top to down if you're selling the market. If you think the market's going to go down, it's literally the exact opposite, right? If you're buying, it goes from top. Oops. If you're buying, it goes from top to bottom. If you're selling, it goes from top. No, sorry. If you're buying, it goes from bottom to top. And if you're selling, it goes from top to bottom, okay? So for this example, if we're selling the market, it's like this. Market came down, made a low, and as soon as you hit the yellow zone, which is kind of what happened actually, now we're looking, right? The market hit the yellow zone, and then it comes down, right? Option number two, it goes past the yellow zone, goes to the cash flow zone, and then goes down. Option number three, you're going to go to the red zone and then go down, okay? It's the exact same concept, right? The only difference is that you're flip-flopping it, right? So taking that into consideration, right, now what we're going to do is redraw the one that we drew yesterday. So we were from here to here. What I was getting at, though, in the very beginning is that once you've drawn this 100 times, you know, you're going to kind of be able to visualize where these discount zones are, okay? And the only one I really like to keep on the screen is going to be the blue one, right? The blue one, again, is the cash flow zone, right? That's the one that usually is the one that's going to get activated 80% of the time, right? So, and if it doesn't get activated there, you already have a visualization of where the other ones are, okay? And I'll just show you guys how easy it is, okay? As this will go over here, for example, right? If we were to draw a line up to here, where is 50%? Where is a 50% pullback, right? It's you just gotta think a little bit, right? Where is 50%? 50% is half, right? 50% is half. So I'd say half is around here. I'd say half is around there, wouldn't you? Right? It's around there somewhere. Okay, so you just gotta do a little box. We'll just say this is our half. So if we know that half is the main zone, and we know 25% is the next one, where would 25% be here? Right? More than likely, it probably, maybe not going to be perfect, probably going to be around here. More or less. Maybe it's going to go a little lower, so let's put it a little bit lower. Let's put a little box right there, right? Where's the next zone going to be? Where's 75% at? Right? 75% is going to be a little bit lower, right? Right there, around there somewhere. Is it perfect? No. Does it need to be perfect? Not at all, right? Because price doesn't move exactly in these on the dot, this number, right? It's a zone that can be respected or might not be respected. Usually it gets respected though, right? So we're going to go with the fact that it gets respected. But what I'm getting at is that it's very easy to just visualize it. So what I like to do, this is what I was getting at, a little tip, you know, a little trick, is once you get good at visualizing the zones, once you draw it, I like to draw a blue box. I like to take a little rectangle, draw a box right around there, and now I just delete the fib. Delete it. That looks a lot cleaner to me, personally. You know what I mean? And it's less confusing. What does this line mean? What does that line mean? What is this color? What is it talking about? You don't need to worry about it anymore. All you got to focus on is this rectangle. Okay, so this rectangle is a zone, right? It's different people are going to call it different stuff, right? It can be called, a supply zone, a support zone, a value gap, whatever the heck, you know what I mean? It doesn't matter what it's called, right? All it's what matters is what it represents, okay? And what it represents is an area. You want to write this down, okay? Every single zone, right? This is something you guys should write down if you're going to be taking notes, right? Because especially in the age of social media, it's so easy to get confused on even me, you know what I'm saying? I get confused half the fucking time too when I'm seeing stuff on social media. That's why I don't listen to it. You know what I mean? But either way, when you're listening, or if you as a viewer, you're watching my material, then you're gonna go watch Bobby Joe, and then you're gonna go watch Rachel Trades, and you're gonna go watch whoever the heck. You're gonna get confused. You know what I mean? And everybody's gonna say the same crap, but they're gonna call it something different. Okay, so to sum it up though, every supply zone, demand zone, support resistance zone, value gap, Fibonacci, psych zone, every single one of these numbers or things represents an area of interest. Okay, an area of interest. What does that mean? Right now, we just go back to buying and selling terms. Okay, what did we say? A buyer and a seller are in the market. So, an area of interest, if you just think a little bit, what could that mean? It's an area where those buyers and sellers are interested in trading, right? It's an attractive price for both parties, okay? Meaning that it's the area where you're going to get consolidation, you're going to get pullbacks, you're going to get entries potentially, okay? So using that into consideration, right? Where let me this. Oops. So area of interest, right? We're talking about area of interest, okay? So very clean. We're gonna go to a higher time frame. We're gonna extend this as far as we can go. Just for the sake of the example, right? Just for the sake of the example. Let's go to the 8-hour. You see, this is what your screen looks like when you don't delete stuff. So me personally, I like deleting stuff. That way it doesn't look like this. But again, I have to keep it all here for proof, for record. Sometimes people ask me to say, hey bro, send me your trade history, and I have to, I don't like deleting them. Okay. So this blue rectangle, we just drew it. Okay. Lines up perfectly. Let me try and keep dragging it without it getting fatter. We'll just do it like this. We're gonna make it go out to here. Okay. So this blue zone that we're in right now. Okay. I wish I could make this look cleaner for you guys, but I can't. So I'm doing my best. Okay. So, and this is on a high time frame. This is on the daily time frame, right? So, a little trick too. The higher the time frame, the more relevant something is. Okay, the lower the time frame, the less relevant something is. A lot of times people send me a fucking chart and they're looking at a 1 minute chart and they're marking up their entire 1 minute chart and they're wondering why you're losing a trade. Okay, the 1 minute chart will not tell you anything, right? All that will tell you is right now what's happening. Like, is it going up right now or going down right now? Right? You can't analyze a 1 minute chart, right? And people that tell you that you can, I don't believe it. I don't believe it. I'll say that. I don't believe it. Okay. So the higher the time frame, the more relevant it is. Okay. So this is the daily time frame. Okay. This blue square, we just drew it over here, way, way, way over here. Okay. Today is what? August 18th. Okay. This goes back to May 19th. So May, June, July, August. May 19th, June. 4 months. Okay, 4 months. Right. So what happened is way back here, the market stopped at this price. Right? Market stopped here and it consolidated for a few days. We went up, we came back down, went up, came back down, went up. Eventually we broke it. Right? Where did we first start stopping again? Right around here. We broke past it a little bit there, obviously. But then what happened here? Right? This was a huge, huge drop off. You guys see the big white candle right here? That means that that's a massive move. That is a massive sell off right there where the blue zone is, right? One of you guys are probably going to be thinking, Ollie, the blue zone that you drew is down here, but the market looked like it started dropping up here. That is true. Okay. But if you guys go watch my video on supply and demand, the way that supply and demand works is, let's say, again, very simple concept. This will take me 1 second, right? Let's say, how can I draw this for you? let's say you're starting to go down, right? You're starting to go down and then you go down. Would you consider where you start falling right here? Or would you consider where you start falling right here? Right? So I'm asking you guys that. I'm asking you guys that. So in the chat, let me know, where would you consider yourself falling? Right? This doesn't make any sense right now. I'm gonna put it all together though. But that way you guys, I know you're following me. Are you falling when you're right here? Or are you falling when you're right here? Like imagine like you're in a car and you're on this cliff. Would you consider this as you're falling yet? Or this as you're falling? Number one or number two? I'm gonna give you guys a second. You can make this a little interactive, right? Number one or number two? Which one would you consider actually a shit? You know what I mean? I'm going down a hill. You know what I mean? And it's not too safe for me. Jamar says the second one. Correct. Correct. Right? That is why. Right? Because up here, you're still relatively stable. Right? And I know this is a very bad analogy. I'm just saying, right? But it's easy to visualize it if you put it in your head. If you're like in a car and you're about to go down this massive hill, right? You're not really, but you're not on the hill yet. You're just on the edge. You're safe still. You know what I mean? You're starting to roll, but you haven't been like, oh, you know what I mean? You're not going yet. You know what I mean? But once, you know, you're like this, you're not going back. You know what I'm saying? You're there. You're stuck. You know, you're going down. Okay, so it's the exact same concept when it comes to trading, right? So even though here on this candle, right, up here, this is where the move started, right? This is where the white candle started forming. Yes, but it can't be considered a drop off until you're dropping. You know what I'm saying? So this what happens is you could still say that this is the resistance, this is the supply area, whatever it is. You could, and you're not going to be wrong, right? But if you're really looking at correct institutional levels, okay, the zone where the demand and the supply happens would be here, right? Because that's where the fall is actually happening, right? And then same thing is the another great example that's relevant right in front of us would be this white candle, right? Same exact scenario. We started moving up here, but then this is where we have this imbalance, I guess you can call it for lack of better words. You have an area where the market just shot. You know what I'm saying? So here, the market shot down, and we gradually move back up, and then it shoots back down again, right? So what I'm getting at, though, ultimately, is that this blue zone is still relevant. That's what I'm getting at, right? Because previous supply and demand is current supply and demand. Previous support and resistance is current support and resistance, right? Previous price action is current price action, right? It's the market literally moves the exact same way every single day, right? Yes, can you lose trades? Can you get confused? Yes. But what I'm getting at though is 99% of the time, it's going to follow stuff that it's already done in the past. Okay. And that's why I like using psychological numbers a lot, because it's a number that's always there. It's not going anywhere. And if you were to just put a line, you can literally go back years and see the same prices being respected year after year after year. Okay. So now what we're going to do, we're going to drop back down to a smaller time frame. We're going to drop back down, make this look nicer. Okay. And now we're going to look at it like this, right? Right here too. This is a smaller time frame, right? Not as relevant, but still relevant. We're on 15 minutes. Okay. This was before. This was a beautiful trade that we won like a week or two. No, this was last week. Which I also sent out into the Cashflow group, so you should have taken it. If you're in Cashflow, you should have taken it, right? But and if not, it's cool. Just take the next one. Take the next one, okay? But either way, perfect example of a fib again. We drew a fib. We drew a fib from here to here, from this bottom to this top. What did the market do? It went up. And where did the market stop and start consolidating, start building pressure, like we talked about in the beginning of the call? Right here in the cash flow zone, right there, right? So as soon as we got confirmation that we were breaking out, what do? We bought. I'm not going to go into the take profits. Basically, the green lines represent your profit targets, right? So it's a tool that tells you where to get in and where to get out, right? So it's pretty easy, okay? I have that on other YouTube videos that you guys can go watch. But pretty much what happened is we went in, the trade hit beautifully, beautiful trade. But then what ended up happening is, where did the market stop? Right? It's very, very clean, very, very easy to identify, right? Where did the market stop? Right there in the beginning of that blue zone, right? So that tells us again, this zone is still active. Ollie, how do you know that it started to go down, right? Obviously, one, you can look at it, right? It went down. Two, right, you start seeing these wicks, right? You see how over here, these are called candles, right? The candles look full, right? They're just one color, blue or white, solid, right? But as we start getting closer to here, we start getting these skinny little things at the top and the bottom. Those are called wicks, okay? That means that price is trying to break up above into that blue zone, and it's getting smacked back down by sellers. So that means that that is an active zone of interest. It's an active zone where where people are participating in trading. Okay. So that's what we got out. Okay. But so I'm just saying, this is number one, first confirmation that this zone is valid. Okay. Confirmation number two. Let's just look back. Again, same thing right there. We stopped right there, came down, broke above it, retested right there again, and then we broke above it. Then we broke out. And then that's what I was saying. We broke above initially. That's what made me want to go in for buys. And then when we come down, what happens? We start getting some wicks, trading pressure. We stopped right there. And then right here where we're at. Right here. So what ended up happening, again, long story short, now we got all that out of the way. That was just a little lesson about how to use the tools that we use in Cashflow. Okay. Is it going to work every single time? No. Obviously, I just lost my trade last night. But will it work 99% of the time? I think so. I think so. I'll say yes. I'll say yes to that. All right, so we're going to draw our fib here. Now that we're going to go into that, we're going to start going into tonight's trade. I'm not going to be on here. I'm not going to try. I didn't even know I was on here for an hour already. Sometimes I just feel like I just talk a lot, but you know, you gotta go over this stuff, man. So I hope you guys are still following along. I hope you're understanding, and that what I'm saying is making sense, right? And if it doesn't make sense, again, just do us a favor and ask the question. But yeah, no, so I appreciate you guys. Okay, so now let's see what we can find for tonight. Reason I lost this trade, honestly, is I think that I just got in a little bit early on the setup. I'm still kind of leaning towards buys, but we're going to do a little bit deeper of an analysis right now. But yeah, so I ended up buying here pretty much. I got in like literally right here. And it literally went straight to stop loss. Went straight to my stop loss. But again, I didn't get in at the best point. If I would have gotten in here, where you're supposed to, after red zone, I wouldn't have gotten stopped out. I'd actually still be in the same trade as last night. So what ended up happening, though, is I got in a little bit late. What did I do? I traded out of session, for one. Kind of forced the setup because I saw the setup, but again, I wasn't on at the right time. And I was pretty lazy and I didn't really look at like other stuff, which we're going to do in a second. So what ended up happening, I lost. You know what I mean? Does that make me a bad person? You know what I mean? I don't think so. I don't think so. But I think it means that I'm a learning trader. I'm a growing trader. And if you're not losing, that means you're not trading. You know what I mean? So anyone that tells you that they don't lose trades, they're a liar, or they're not trading, which means they're a liar. Okay? So, let's see what we have for tonight. Okay, so we're gonna go ahead and make this box smaller. I'm gonna delete that. We're just gonna do it again. Okay, so we got our blue box. We're just gonna put it right here. Boom. Okay. Oops. We got our box. We're gonna delete the fib. Fib's gone. Okay, but now what we do is we have a zone, right? So we have a zone where the market is consolidating. Okay. Now we also we have a bottom over here, and we're floating right in between 750, right? 5750, which is a quarter level. We're floating right there. We've been trading there all day long. The market hasn't done any movement today. Okay. So that's what I'm saying. I'm expecting price to move higher depending. Let's see if we have news tomorrow. There's going to be a little side thing. It's going to take me 1 second. Because pressure's building up for a reason, right? So usually in the middle of the week, towards the end of the week, there's more major news announcements that move the market. So potentially there could be something happening tomorrow or in the middle of the night that, if this loads, we'd be able to see. You saw that? What was that? Japanese fan arrested after canceling Naruto and One Piece merchandise. It's crazy. Okay, there we go. Today is Tuesday, nothing. Tomorrow is Wednesday. So during London session, Caesar Alley says, "Hey, what's up? How's it going, my friend?" I don't know. I don't know if you're Cesar Rodriguez or Cesar Oliva, but either way, happy to have you here, my friend. So tomorrow we have CPI for GBP. Caesar Sally is Marie. Oh, what's up, Marie? Nice to see you. Nice. I wasn't expecting you. That's funny. Marie's a good friend of mine. She came here to support us, right? Yeah. So CPI, that's tomorrow at 2 a.m. I don't really trade GBP, so I'm not really caring too much about that. But Euro has news at 3 a.m., 3:10, right? So more than likely, this is why the market's been building up pressure, right? Because what's happening tomorrow, I'm not going to go too far into this, but this is basically going over the European Central Bank rate of interest, right? This is going to be a whole thing I'm not going to go into, right? If you're in cash flow, go to Fundamental Mastery and go learn about interest rates, okay? But basically, tomorrow morning, there's going to be a meeting with, I guess, President Lagarde, right? He's going to be speaking about the European Bank interest rate, right? And what that means is the higher the interest rate, the more value the euro has. The lower the interest rate, the less value, okay? Meaning the market's going to go up or down based off of what this guy says, okay? That's pretty much what that means. Okay, so price is probably building up for that. And then same thing tomorrow, actually. The US is having their version of that same meeting tomorrow. Okay, and I'm going to give you guys my little insight about that. I focus on the dollar more than the euro. I personally think that rates are going to get cut. I think that's kind of where I'm leaning. Again, there's a whole I really don't believe anybody can really predict what they're gonna say or what they're gonna do. I just genuinely don't, right? But I have a feeling based off of just different articles that I've read that either rates are going to remain the same or they're going to get cut, and that's not good for the dollar, right? That's not good for the U.S. dollar. Okay, now based off of that, and based off of if the euro gets their interest rate cut or not. I don't think anything's going to happen to the euro. I don't think they're going to change their interest rate at all. But based off of those two things, that's probably why the market's building up so much. I'm not going to go too far in depth into that tonight because that's a whole other thing. But that's what you got to be aware of, right? That's what I'm getting at is that's why the market has probably just been going up and down in a form of consolidation for the last 24 hours because it's anticipating the announcement tomorrow. Okay. And that happens a lot of times, right? We've only been trading right here, and we're probably only going to stay right here until tomorrow. I personally am going to say I'm still bullish. I am still bullish, right? But we're going to look at a couple other things just to get a further confirmation on this. RSI is fucking useless right now. That doesn't tell us anything. Excuse my language. Let's see. Let's change that to a 4. That doesn't say anything. Let's put that back to a 10. This is another tool that you can use. So basically what we want is for this to either be above here so we can sell, or we want it to be below there so we can buy. Right now we're literally trading in the middle, which again just further confirms that we're consolidating right now. So nothing there. Basically that's useless. That's a useless tool right now. We're not going to use that anymore. Number 2, let's see. On the 15-minute, it says we have a strong high. On the hour, it says we have a weak high. So when that happens, what do you do, right? Again, You're gonna get some wrong every now and then, but generally speaking, the higher time frame usually wins. Okay, so the only thing you need to take into consideration is that the higher time frame is gonna take longer to happen. Okay, the hour time frame is gonna play out over the course of a few hours, right? Maybe a day, right? Versus the 15-minute time frame, that's going to happen in 1 hour to a few hours. Okay, so on the 15-minute time frame, it's telling us that this is a strong high and this is a weak low, meaning that for the 15-minute temporary, we could potentially go lower, potentially, and then eventually, we go higher, right? That's what it goes. But on the hour, what this is telling us is that this is a weak high and this is a strong low. So in that 15-minute time frame, if the market goes down, that's not necessarily a bad thing, right? It doesn't mean that the analysis is wrong. It just means that for the 15-minute time frame, it's going down. But on the hourly time frame, it might go down to here, and then that's when it's going to go up. Right? I see this as a bullish market structure right now. I mean, I genuinely do. But a couple things to take into consideration still. Well, we're going to look at a couple other things. We're not going to set it in stone yet. All right, let's drop to the 5-minute really quick. 5 minutes says it's a weak high. So we have 2 out of 3. We have 2 out of 3 saying that it's a weak high, strong low, meaning that we're going to continue higher. I'm just going to hold that bias. I'm going to keep it simple. I'm just going to hold that bias, okay? If you start, questioning yourself too much, you go crazy, pretty much. We're going to look at our EMA cross. That's pretty useless to us right now, being honest with you. We have a bullish one right there. Let's see what the hour says. Hour, we're still building up pressure. If we can get a cross on the hour, I would still consider getting in on that. What else do we got? Auto fib. Same bullish on the 5. On the 15, we're also bullish. On the hour, I was seeing this too. I was a little not confused, but I didn't know if we should maybe I'm gonna stop talking for 1 second. I'm just gonna look. Give me a second to look. Over here, that's 20 pips. Honestly, I'm still thinking buys, man. I'm thinking buys short term at the very least, 20 to 30 pips. And then depending what happens into tomorrow. What is the names of the articles you read? Honestly, bro, I just read Forex Factor, man. I'm not even lying to you. If you go on, I use MSN. I think MSN is pretty good for keeping up with stuff. I know it's gonna sound corny, but a lot of times, just because it's my algorithm, you know what I mean? Where a lot of times I'll be on here, I'll open up a new window, and I see things like today. I read 3 articles on this thing about the interest rates that are happening. You see right here, CNBC rates are heading higher for all the wrong reason. That's about I think that's about inflation rates, but Reuters is another good one. This is about home builder. But I'm not like looking shit up, bro. I'm not gonna lie to you. You know what I mean? Because again, they make it. This is a conspiracy, bro. Okay, but I think honestly that the government makes it purposely so difficult to read and understand that like if you don't have a degree in finance or whatever, you're just not gonna understand what they're telling you. And I think they do that shit for a reason. That way, again, modern people and normal people don't have the ability to participate in these financial markets. You know what I mean? It takes a long time to learn this kind of stuff about like this news report's gonna move this and that's gonna move this, right? It takes time to learn that. But if you like, I don't subscribe to anything about like there is a new tool that I started using, which I'm not gonna announce it yet, but I'll probably announce it like next week or so. That helps like break down macroeconomics. But I just use Forex Factory, bro. Forex Factory, and then you get a general idea about what's gonna happen. If you want like a more advanced look at the news report, you can use FinViz. FinViz is a free tool. It's FINVIZ, FinViz. That's a free tool you can use. Again, is it beginner friendly? No. right? Is Forex Factory more beginner friendly? Yes. But besides that, dude, I wouldn't really get too concerned with it, right? I you look up Forex Factory to see what news reports are coming up, and like again, for example, like if you see this FOMC meeting minutes is coming up, that's tomorrow at 2 p.m. If you go on your computer tomorrow at 2 p.m. and you type in FOMC, you get on at like 1:30, you'll see people like streaming it. You'll see CNBC streaming it. You'll see Fox streaming it. You'll see different people that are like streaming it, and you'll see articles about it when you type it in. You know what I mean? But I don't like keep it like on my calendar, if that makes sense. And you just get better with it through experience. If you refresh it, let's see what it says. If you refresh it, you'll get something else. Yeah, S&P flashing warning. You just got to read it. What does it say? Motley Fool is pretty respectable. Um, mortgage rates have to do with the interest rates that are going to be talking about tomorrow. Someone told me that interest rates are going up for mortgages, which sucks. But that probably won't happen if the U.S. interest rates get cut. Job vacancies. This will have to do. Which one does that have to do with? Not PPI, CPI, or job or NFP. It has to do with one of those. But yeah, you just see what's on there, bro. Honestly, I'm not gonna lie to you. This one's talking about the Treasury yield. That's at 4.6% right now. That's like tomorrow's interest rate meeting is going to be talking about like that, pretty much. The interest rate for the dollar for buying, selling, and loaning money out at a bank-to-bank level. It has nothing to do with us. Okay, so I'll shut it up here. Right? So basically, what's going to be talked about tomorrow, okay? Let's just talk about it like this. This is the top, okay? This is bank to bank interest rates. So imagine if I'm Bank of America, okay? Christo, for this example, you are going to be Chase Bank. Okay, let's say Chase Bank has a private equity deal or something of that nature, right? Or a real estate deal where they need money, right? They're going to go to Bank of America and they're going to ask Bank of America for $50 million, for probably $100 million, for example, okay? Bank of America is going to give the money to Chase Bank at what is it right now, dude? It's above 4, I'm pretty sure still, above 4%. They're going to give you that $100 million at a 4% interest rate, okay? That's known as the prime rate, okay? So bank to bank interest rates and the interest rates that are talked about during FOMC, that is about the prime interest rate, okay? So that is bank to bank only, okay? But what does bank to bank affect? Everything else on the fucking planet, okay? The banks move and control everything, okay? So if the bank interest rate, let's just say it's 4%, right? 4%, right? What that means is that tomorrow, if interest rates get hiked, right? What that means is that now the interest rate is now 5%, right? That's good for the bank because that means that if I give you $100 million, you're going to have to owe me 5% of that in interest versus 4%, meaning I get more money for giving you money, right? Meaning that the dollar is worth more now. Literally, that's how that works, okay? And if the interest rates get cut, let's just say I think right now actually it's like 3.5 or something like that, right? But if interest rates get cut to 3%, that makes it more attractive for you, Chase Bank, because you're going to get $100 million for a lower interest rate, right? But what that means is that the dollar now is worth less money. Why? Why is it worth less money, right? Because it's easier to get, okay? So at a bank-to-bank level, if Japan, if Europe, if London, these other mega powers in the planet start seeing the U.S. interest rate going down, right? That means that their currency, if they maintain their 5% interest rate, it's worth more, right? Because they're getting paid more money for loaning money out, right? When does this happen? Why do they cut interest rates? They cut interest rates because of inflation, because of pretty much just inflation, right? Pretty much inflation, right? When people stop buying as much, everyone here says they're broke, right? Everyone here, thinks with that mentality. Not you guys. You guys aren't broke, right? I'm not either. Okay, but people not in cash flow have this mentality that they're broke. I don't have money. I can't go spend money. I got to save, right? So what they do is they lower interest rates to get it easier for you to get approved for a credit card, to get a bank loan, to get a personal loan, right? To go buy a car, whatever the fuck it is. They lower the interest rates. That way it's easier for consumers, us, to come in and spend our money, pretty much, right? So when the higher the interest rate, the less affordable it is for us, okay? But the more expensive the dollar is, the more attractive it is for investors, not for retailers, but for investors, okay? When interest rates get cut, that means the dollar isn't worth as much money to investors, but it's easier for consumers to get the money, right? So long story short, that's what interest rates are, and that's what they're going to be talking about tomorrow for Europe and for America. And so basically what that does, it's a huge thing, right? So if tomorrow, what's going to happen, this is what I'm telling you, this is what's going to happen, okay? And I'll send a picture in the chat so you guys can see. Okay, tomorrow, if interest rates get cut, if interest rates maintain, if they don't get cut, we're going to continue consolidating, more than likely. We're going to continue consolidating, more than likely, slowly going up, okay? If interest rates get cut at all tomorrow, okay, we're going to fucking explode, right? That's how it works, right? If interest rates get hiked, meaning that they raise interest rates, the dollar is going to get a lot stronger. It's going to become a lot more attractive to investors. And what's going to happen is the market's going to tank, right? Literally to the next whole number zone, probably. It's going to go to the next major psychological zone, okay? I'm telling you, right? So quote me on this. I'm telling you. And if you want to see where, like, let's say the market ends up shooting up, right? Just pay attention to where the price stops. Pay attention to where it stops, because this stuff happens fast, right? So traders, they don't have time to think, oh, I want to get out at this exact price. No, they're going to put a zone. They're going to put a take profit area. Where's that take profit area going to be? It's going to be at the next psychological zone. It's either going to be here, here, or here. At a minimum, right? At a minimum. And if it goes down, it's going to be here, or it's going to be here, right? Is the market going to stop there exactly? No, but something you might see, right? As it comes down, breaks out, goes here a little bit, goes back down, but fast, right? Or same thing, it might go up to here, stop for a little, and then go. Or it might just fucking shoot up. Like NFP the other week, it had like 100 pip move, and it just smashed through different levels because it was a big news release, right? So same thing, that tomorrow is going to be a big day in the market. So tomorrow, honestly, when you get news reports like that, dude, those are the days that you can make a lot more money. You know what I mean? If I'm being honest with you, you can instead of getting like a 3-to-1, you can get like a 5-to-1 or a 7-to-1 risk to reward. If I'm gonna risk $150 tomorrow, you can, instead of me making $450, you can make $750 to $900 on the same exact setup, same setup. No increasing your risk, right? Stop loss is gonna be stop loss no matter what. Because if you're wrong, you're just wrong. It doesn't matter, right? But for example, let's say I want to go in for longs right here. I want to go in for buys. If I want to do, let's just say instead of doing a 30 pip take profit and a 10 pip stop loss, right? You can get away with instead putting it at a 50 pip take profit and keep the 10 pip stop loss, right? So what I'm getting at is, because the market is going to move a lot faster, a lot more aggressive, you have an opportunity to just make more money, is what I'm getting at, right? Without increasing your risk, right? Where people fuck up though, it happens, myself included when I first got started, is people see this opportunity to trade the news, and instead of increasing their take profit distance, what you do instead is you increase your lot size, right? You increase the risk on the trade. And that's where people fuck up, right? Is when you start changing the numbers on your trade, the risk, the lot size, your stop loss distance, none of those things should change. The only thing that should change during the news is your take profit, right? Because how you can be confident that it's going to go up, you have no idea. And I'm telling you the truth. Nobody on the planet right now, except Trump, political insiders, and reptilian elites, know what is going to be said tomorrow. Okay? I swear on my life. Okay? No one else knows what's going to be said tomorrow, right? Except the people that are controlling the fucking government. No one knows what's going to be said. Okay? So that being said, we can have our best idea about what the market is going to do, but that does not mean you increase your risk. just because you have the chance at a higher profit. You know what I'm saying? So for tonight, um, honestly, dude, right? I'm still thinking buys, right? I think that, you know, right now we're literally in the middle doji. This is a new tool I started using kind of recently, where it shows you like the daily bias of the time frame you're looking at. So like right now we're looking at the 15-minute, but overall it looks like we're going down still. 5-minute, we're rejecting. 1 minute, we're rejecting. I am Aether said TradingView has little icons you can click on in real time as well. Oh yeah. That's true too. That's true too. Whenever the news releases are about to happen, or sometimes even prior to it, you guys see this little lightning bolt down here. So it's just telling us latest updates. Dollar range bound as markets price. Dovish Fed response. Dovish means dovish means down. Dovish means down. Right? Because it's different than bullish and bears. It's different than bullish and bears. Dovish means not aggressive. Right? So for interest rates, so for the market, there's bulls and bears, right? Bulls means you're buying, bears means you're selling, right? Interest rates don't operate that same way. They operate instead as hawkish or dovish, right? And the reason why a bull is called a bull is because like it goes up. You know what I mean? Like it attacks, it goes up, right? When a bear attacks, it goes like down. I know it's a stupid analogy, but like that's literally where it came from. Bulls, you know, they charge up, and bears, they, you know, they swipe down at you or whatever, right? Whatever the fuck. Okay, but for interest rates, it's called hawkish or dovish. Okay, so hawkish means aggressive, meaning rates are getting hiked. Dovish means passive, which means it gets lowered. Okay, so what I'm understanding, I need to Google that too, because sometimes I get that mixed up a couple times. Let's Google it. Right? You know what I mean? I'm a human being. I'm a human being. I'm a human being. Does dovish mean interest rates get cut or hiked? Dovish means get cut. Okay, so I was right. Yeah. Okay. Hey, your boy knows what I'm talking about, man. I know what I'm talking about. Right? You know what I mean? Don't call me a scrub. I know what I'm talking about. Okay. So yeah. So dovish means that they're expecting it to get cut. Okay. So if the market's potentially going to get cut, why is the market, meaning that the price would go higher? Why is it going down right now? Right. Right now, the price is going down, probably to price it in. Right. Again, it's so there's three phases of the market. All right. There's accumulation, manipulation, distribution. Okay. Accumulation is what's happening literally right now, where price is tight. We're accumulating pressure, buying and selling pressure. We're accumulating. Okay. We're consolidating. Right. We're bouncing back and forth. We're accumulating. Right. And then there's the second phase, which is manipulation, right? Where the market, let's just say, for example, let's say I'm right. Let's say I'm right for the sake of example. And the market tomorrow morning is going to go up. Okay. What's going to happen throughout the night is more than likely we're going to accumulate, manipulate down to convince people that we're selling, right? That way people start selling the market, right? People are going to start entering for sell orders. People are going to exit buy orders, and it's going to make price go down at a discount. We're going to go full circle now, right? At a discount. It's going to make price go lower. When tomorrow morning, again, the elites, the institutions, the banks already know what's going to fucking happen. They already know, right? Don't ever forget that, okay? They already know what's going to happen, okay? So, whenever, oh, what's up, Kamari? Yeah, so they already know, okay? So, if they know that they want price to be up here tomorrow morning, how can they make the most money possible? Okay, they're gonna accumulate price, probably make it look like it's gonna go down. That way people don't buy. That way people don't enter the market, and instead they start selling. Right? When they start selling, the price is gonna go back down. Let's just say, for example, I represent retail traders. Okay, we pump in $15 million in sell orders. For example, $15 million in sell orders in the span of the next, 5 hours, whatever, right? That's free. That's a free $15 fucking million for them, okay? Because let's just say we put in 15 million here, expecting price to go down. When they get in tomorrow morning for 100 billion, for example, there, 15 million times every trader on the planet, they're all going to get stopped out, right? And they just made a lot more money, and they made a lot more pips. They made a lot more profit by manipulating price. Okay, so those are the three phases, what I'm getting at, right? So accumulation, manipulation, and distribution. Right now, I would say that we are in accumulation still, right? I wouldn't personally want to get in right now. Oops. Yeah, we're not in a place to get in. I'd be lying to you guys. I don't want to lie to you guys. Do we have divergence? Yeah, I think so. You know, like this looks like it's going down, but we're getting like higher highs here and higher lows. That's called divergence. Um, Bullish divergence in this specific situation. You see, like right now, how market's tanking, that could be literally a sign of that the manipulation starting into Tokyo session. I'm not gonna get in. I'm not gonna get in on a trade, all right? But my bias is this: I think tomorrow the market is gonna go up. I can tell you pretty simply, where we think it can go, right? Let's just do this really quick. If we're gonna draw our fib from here to there, that's a big one. But we're doing that on a higher time frame, so it's chill. It's Gucci. I think we're gonna go down to there. I'll say that. I think I think that if we can get price down to here into this blue zone. Let me turn this off so you guys can see it a little bit better. If we can get price into this blue zone, I think that will be a little bit better for buys. I just don't feel comfortable selling it right now. I don't think the dollar is gonna have a positive news report tomorrow. Could we sell it and maybe get 5 to 10 pips, maybe 15 pips? Sure, but just because you can doesn't mean you should. You know what I mean? I was taught that a long time ago, long time ago. Just because you can doesn't mean you should, right? As we can see here, we have a little triangle pennant forming. This is like the definition of like don't get in. You know what I mean? It's a definition of something's about to happen though. Okay, you know what I mean? So for London session, I might set an alarm. I might set an alarm and get up. Honestly, no BS. I'll look to enter in the middle of this zone, right? So that way we just have little peepers, right? For this fib, we already broke past the 25% zone. 25% around here. We already broke past it, right? We haven't broke past 50% yet, which is right here. If in the middle of the night, I notice we're like down here, the only other place that is worth buying this trade, if we're going to look right here, you see this little resistance area? That lines up perfectly with 75%, right? So our next buy zone would be right here. If we were to get in on a trade, if we missed the blue zone, it would be that next 75% off, which would be right around here, right around there somewhere. So we're going to make another little square. Next area of interest is going to be right around here. Oops. Cool. So that's what I'm saying. I know I went over, this call went way longer than I was supposed to. But hey, first one in a long time, guys. First one in a long time. You know, I appreciate you guys for staying on. That's what I see, honestly. I think I'm gonna hold with that. I'm gonna hold with that bias. I think that we can get a good buy opportunity. You don't want to catch a falling knife either at the same time, but I think we can get a good opportunity on that. I think tomorrow the interest rates are going to get either the same, remain the same, or get cut. And both of those aren't the best news for the dollar. So I think that with that being said, that there's a good chance that we can get, you know, a good 30 to 50 pips on this trade. So to sum it up, what I'm going to wait for is a break of structure out of this triangle, right? It looks like it's going to happen to the downside, right? So it looks like we're going to break down, maybe retest it, and either around here, we're going to look to get in, or around here, we're going to look to get in, right? Which is literally right in between the 500 zone. So as of right now, I'm going to want the market to drop another at least 10 to 20 pips, 15 pips if we want to call it safe, before getting in on this, right? So, and obviously I'm going to update you guys too. If you're in the Cashflow app, you know, make sure that, you know, you have your notifications turned on. But that's what I'm seeing, man. Obviously, what I'm going to do, I'll take pictures. I'm going to post the updates. I'm going to send you the trade once I get it in. If I don't get in, I'll let you guys know. But I'm pretty sure that that's what we can expect. I think we're going to go work a little bit lower. Is it worth buying yet right now? Unnecessary risk. Is it worth selling right now? Also unnecessary risk, right? We have two major news releases happening at 3 a.m. and tomorrow at 2 p.m. What's the smarter thing to do? Wait for the setup, right? Wait for the setup, right? Even though we know what's probably going to happen, you don't want to force the setup. Okay, that's what I did yesterday, right? So I'm not going to repeat the same mistake. Instead, we're going to wait for the setup. If it happens, it happens. Cool, we're going to make a lot of money. If not, it's cool. We're going to make a lot of money next time. You know what I'm saying? You know what I mean? So, with that, guys, does everything I said make sense? I know the viewers dropped a lot, man, over the last hour. Right? A lot of times people only have an hour in them. You know what I'm saying? But for the people that are still here, still watching, and still focused, does what I say make sense? Make sense? Does everything I say make sense? Is there any questions, comments, concerns, confusions? Something you guys want me to answer? Or how are we feeling tonight? How are we feeling? If everything made sense, do me a favor and drop some threes in the chat for me. If everything made sense. If you guys learned some stuff, it made sense, you feel a little bit more confident in your trading, drop a 7 in the chat for me. If you're a little more confused about your trading and doesn't make sense, then drop a 1 in the chat for me. As a newbie, a lot of this is still confusing. You just have to keep learning. I agree, Jamaris. You have to. Is step by step, right? Step by step. The biggest thing though is but everyone else too. Everyone else, you know. So we have one person saying they're a little bit confused, which is fine, right? You were honest. That's the most important thing. You were honest. But everyone else in the chat, you know, if it doesn't, Natalia says it doesn't make sense, that's fine. She's also a beginner student, right? You guys are together on that, right? So don't feel left out. But everyone else, if it made sense to you, do me a favor. Or did I say drop threes or drop ones? Whatever. Doesn't matter. Whatever. If you guys do have questions, comments, concerns, you always know where to find me. You know where to find me. I'm in the Cashflow app. You have my number. I'm on Instagram. Instagram fucking disabled me from sharing links. Can you believe that? You know, there's so many fucking, you know, there's scammers, prostitutes, drug dealers on Instagram, and they block me. You know what I'm saying? That's crazy. Okay, guys, but with that, I'm going to let you guys know how the trade turns out. If you're confused, take a picture of your confusion, write your questions down, ask it in the team chat. If you're not in the Cashflow app, join the Cashflow app, guys. Please, I'm begging you. Do yourself the favor and join the app. If you're in the app, do yourself the next favor and use it, okay? I pay for it, you know what I mean? I pay for it. I'm not the one that needs the app, you know what I mean? I pay for the app for your guys' benefit. That way you guys can use it to your advantage, man. Ask questions, post your trades, engage with other traders, and just do your part to be a trader, right? Hey, Christo, man, I know, man. I'm gonna do my part, bro. You guys do your part. I'm gonna do my part, right? My part is I need to show up for you guys and teach you guys and do these calls. Sometimes, man, like I said, you know what I mean? We're not even gonna talk about the past anymore. We're gonna talk about the future. You know what I'm saying? We're gonna be excited about the future, right? Instead of us regretting the past, I coulda, woulda, shoulda, right? We're gonna coulda, woulda, shoulda in the future. You know what I'm saying? So I will do the calls more often. I might make one change to the schedule on Sundays. I'm not 100% yet. But if Tuesday works with you guys, I can make a commitment. You know, I'll be on here every Tuesday. I want to say Thursday too. I'll confirm tomorrow night if I'll be live on Thursday night. You know, we'll go over the market again. We'll go over this trade. If I go live on Thursday, we'll go over what this trade turned out to be. Win or lose, whatever, it doesn't matter. But yeah, no, I appreciate you guys. Do me a favor, man. Hey, I'm gonna take a little flick really quick. Little video. And a little picture. All right. Hey, we are plugged in right now. We are plugged into the Cashflow live stream. We got all of our students right here. If you guys learned something tonight, do me a favor and drop a 1 or a fire emoji in the chat. If you guys got some value, if you learned, and if you are ready to dominate the charts this week, do me a favor, drop a 1 or a fire emoji, right? We just threw down on the charts. We just traded live, or we broke down our trade analysis live, and hopefully our trade tonight and tomorrow goes good. But, cool. But yeah, no, I gotta take the video, guys. But, that's pretty much all I got for you guys. Like I said, if you have questions, ask it in the chat or text me. I'm gonna post trade updates for this tomorrow. What else? I feel like I'm forgetting something, man. Hey, shout out to you guys. You're the best. You're the best. Hey, lit, lit, lit. Cool. Well, I'm glad you guys learned everything that I had to go over tonight. As always, like I said, if you guys get confused, ask it in the chat or text me. What else did I have to tell you, man? I had to tell you guys something. The course update, the trade schedule. Man, I can't remember. I can't remember. I'm not gonna lie to you. I can't remember. That means it's not important. My mom told me that. If you don't remember it, it's not important. But if I do remember it, I'll make sure to tell you guys. But that's all I got for you guys tonight, man. So like I said, if you guys have questions, let me know in the chat. But study tonight to go over your notes. If anything I said, I'm going to post this recording as well if you guys want to rewatch it, whatever the case may be. But just study hard, plug in, trade daily. That's what I was going to say. Trade daily. About what you were saying, Jamarius. I'm about slow progress. Not slow progress, but we're still in the struggling phase, right? The only way, I'm going to make this short, the only way that you guys can really get better at trading is you got to trade, man. You got to trade. You cannot just look at a chart and expect to know what you're doing. I promise you, dude. From my own mistakes, right? You can over analyze too much. Okay, the only way that you guys can build data on if you're trading, on if you're improving or not doing good in trading, is if you're trading, right? Trade demo, maximum, dude. At maximum 2 weeks. 2 weeks at a maximum. Hit your percentage goal, 5-10% on demo, and switch to a live account, right? Don't go crazy, right? Some of you, one of the students the other day, they deposited like $4,000 into their account, brand new, and I'm like, bro, that's a little bit too much. Eventually you'll make more money and then deposit 4,000 into your account, but start out $50, bro, $50, $100, and just get used to trading. You got to get your feet wet. You got to put skin in the game and start trading. That's the only way you'll get like the emotional attachment to it to really start doing it, right? Because you can only learn so much from watching videos and getting on the streams, right? At a certain point, it's like I don't even know what to compare it to. I guess riding a bike. You know what I mean? You can watch a lot of videos of somebody riding a bike and like know everything about a bike and know every single best bike rider in the planet, but you don't actually know how to ride a bike until you ride the bitch. You know what I mean? And eventually, if you fall down, you're gonna fall, maybe, right? But at least you're getting experience, right? And then eventually you'll learn how to ride the bike on your own. Okay, so the only way that you get actual applicable field experience in the charts is you have to trade, right? Pick a session, pick a time, stick to that time, stick to that pair, and just trade it every single day. One trade per day. Just take one trade per day. Right? So if you're not actually trading yet, right? I'm talking to whoever's not trading yet, whoever it is, whether you're watching this now or later, okay? I challenge you for this remainder of the week. There's 3 more trades, trade opportunities. There's 3 more days this week: Wednesday, Thursday, Friday, okay? Take 3 trades this week, okay? Demo or live, it does not matter. But do yourself the favor and take 3 trades this week, okay? Even if you're just following mine, it doesn't matter. But you'll at least do something that you'll have data with to see what is actually confusing you. Because the problem is a lot of times it's confusing. I'm not going to sit here and say it isn't, right? Trading is a bunch of fucking mumbo jumbo if you don't know what you're doing. You know what I mean? But at a certain point, it's you only get better with application, right? I can sit here and tell you, I can talk about the same stuff for the next 10 hours. Literally, I could. Okay, and I have. Okay, so I could, right? But it's not going to make a difference to you, right? The only way you really will learn how to trade is if you trade. I promise you, right? Take the information you get from these calls, take your notes, take the information you get from the videos, and apply it and fail. You mess up, right? A big reason why people fail, honestly, failing means, in my opinion, when you don't do it. You know what I mean? When you do it or you stop doing it, right? But failure in the sense that, most of us like to associate it with, it means your first attempt in learning, right? First attempt in learning. So just don't have the fear of trading, right? Take what you learn and press the button. Press buy or sell and see what happens. You know what I mean? If you fail, it doesn't mess up. It doesn't matter. You just messed up a little bit. It was your first attempt in learning, and you get better, you make improvements, and you show up the next day and you do it again, right? This is a lifelong thing we're doing, right? We're not trading, for 2 days and then fucking stop. You know what I mean? We're doing this for the rest of our lives. That way we don't need to have a job. You know what I mean? Going on 5 years strong, man. 5 years strong, okay? So I'm telling you guys, it works, right? If you just do it, right? But it does not work if you don't do it. I promise you that too. Okay. So if you don't do it, you're not gonna make no money. Okay. And we don't want that. We want to make a lot of money. We want to have fun. We want to have financial freedom. Right. And it takes time to get to that point. Right. So I posted a video about this the other day. The faster you do the work, the faster you're gonna get the results. The slower we do the work, the slower you're gonna get the results. Okay. I don't like results slow, personally. I don't. I like fast, right? Fast is fun and success loves speed. Okay. So this week, challenge yourself, 3 trades. Okay. And if you want to go the extra mile and make me happy, post your 3 trades in the Cashflow Campus app. I challenge you to. Most of you probably won't. The people that are on here, right, it says there's 8 viewers right now. 8 of you probably won't do it. You know what I mean? Who is going to post their trades? Me. Because I'm trading. You know what I mean? So if you are trading, post your trades. Post your trades. And I'll help you with it. You know what I mean? I'll help you. So we're gonna go ahead and end it off there, man. That's the challenge for you guys, okay? 3 trades, Wednesday, Thursday, Friday. Copy me or trade on your own, whatever it is, right? But analyze the market, trade the market, and take your notes, right? And if you guys get confused, you lose your trade, you need help. Ollie, what do I do? Ollie, why did I lose? Ollie, how can I get better? Message me or post it in the team chat, and I will answer you. Okay, but with that, guys, I'm gonna go ahead and end it off. I'm gonna go eat dinner, right? But I'll post updates about how the trade goes. Again, I'm expecting it to drop 10 to 20 pips, more or less. And then we're going to look for an entrance at that point. We're going to be looking to buy, right? For simplicity. We're going to wait for the market to go down a little bit, and we're going to buy, right? We're going to buy at a discount, okay? That's what we're looking for. Okay, so with that, guys, I love all of you. I appreciate you all hopping on here. For sure, next Tuesday, 100% next Tuesday, 60% this Thursday. Okay, 60% this Thursday. I just got to figure out what I'm doing. I'll say 75% on Thursday. Okay, so if you guys want me to be live on Thursday, go into the Cashflow app, tell people they missed out, and post your trades, right? And I'll know that you guys want me to come back on Thursday, okay? But with that, guys, I'm going to go ahead and end it off there. I appreciate you all. I love you all, and I will see you on the next episode of CashflowTV.